Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Green across the board, a correction has taken place. Like I was mentioning yesterday when silver was down below $18, that there is a lot of stability and there is fundamental value that people see in precious metals, and that's why it has stood above the support lines, and now we see silver back up above $18 again. We see gold at $1,556, up $8.68. Silver at $18.08, up 24 cents on the day. Platinum at $1,022, up $37.24. And palladium, $2,264.90, up $69.58 on the day. So right here you see this silver chart, and we see it up 22 cents, 1.25%. We see a huge rally or a huge spike from the $17.80 range up above $18. And this is all because gold and silver have real value, intrinsic value, and people know this nowadays. Demand is rising as the supply is diminishing. So I do have an article from Kitco talking about this corrective bounce during the midweek. This is fresh off the press Wednesday. Link will be in the description if you want to check it out yourself. But let's jump into it. So, gold and silver prices are firmer in early U.S. futures trading Wednesday. The metals are seeing rebounds following recent selling pressure as global stock markets on Wednesday are pausing from their recent rallies that pushed U.S. indexes to record highs Tuesday. So, global stock markets or stocks have been rallying, and that's what's been pushing precious metals prices downward. But I kept telling you guys that this won't last forever, and when things do start to come to a halt, it's going to give a lot of opportunity to precious metals and allowing them to start to rise again. And this is exactly what happened. If the dollar index is low, precious metals are high. If the dollar index is high, precious metals are low. Stock market setting record-breaking highs. Guess what? Even though prices should have started going lower, right? Gold and silver had some stability there. So I knew that there is at least that $18 support level that is always going to be standing some ground, standing some weight, no pun intended. So anyways, let's keep on going. So, February gold futures were last up $4.70 an ounce at $1,549. March COMEX silver prices were last up 4 cents, $17.79 an ounce. Now we see silver around $18. And on this, it shows $17.98, but on JM Bullion, it shows it around $18.08. So, Asian and European stocks markets were mixed to weaker overnight. U.S. stock indexes are pointed towards slightly lower openings when the New York day session begins. And now let's jump into the meat and potatoes, what's going on with the U.S. and China's partial trade deal. So, the marketplace at midweek is focused on the U.S.-China partial trade agreement that is scheduled to be signed Wednesday in Washington, D.C. China has pledged to buy $200 billion in U.S. goods over the next 2 years. Specifics on the amount spent on what products are not likely to be revealed at the signing. We know like the first deal was like soybeans. It was basically like a rough draft just to see if they could get something flowing and seeing, how it would work out. There is some concern in the marketplace that the trade deal will not have the U.S. lifting its trade tariffs on China imports until later this year, which has put some mild pressure on global stock markets. So, however, those who have followed the trade negotiations more closely say the timing of lifting of U.S. tariffs has been known by the Chinese and others for quite some time. The U.S.-China partial trade deal is expected to boost global economic growth in 2020. Still, don't expect U.S.-China trade and other political differences to completely disappear after the signing today. So it is going down today. This is what we've been waiting for several months. If this is going to work out, we know it was extremely wishy-washy. These situations are extremely wishy-washy because the people at play, or the people playing the cards, both are very power hungry, and they will not fall to anything short of what they want. Now, like it says, don't expect this U.S.-China trade deal to completely disappear after the signing today, or the political differences. There's still a lot of things they have to fix and work. It's still a very big rough draft, and that's why it's called a quote-unquote partial trade deal. But anyways, in other overnight news, economic growth in European Union's workhorse country, Germany, fell to a 6-year low in 2019, at only 0.6% annual expansion. Meantime, Eurozone industrial growth was up 0.2% in November, but down 1.5% year on year, it was reported today. The key outside markets today see crude oil prices weaker and trading around $58 a barrel. The U.S. dollar index is modestly down earlier today, from which we've mentioned previously in this article. U.S. economic data due for release Wednesday includes the weekly MBA Mortgage Application Survey, the Empire State Manufacturing Survey, the Producer Price Index, and the weekly DOE Liquid Energy Stocks Report. So technically, the gold bulls have the overall near-term technical advantage, but the January spike high is strong chart resistance to overcome. A price uptrend is still in place on the daily bar chart. Bull's next upside price objective is to produce a close in February, and this is pushing the solid resistance at September's high of $1,571. Bear's next near-term downside price objective is pushing futures prices below solid technical support at $1,525. First resistance is seen at the overnight high of $1,554, and then at this week's high of $1,563. First support is seen at the overnight low of $1,546, and then at this week's low of $1,536. Wyckoff's market rating 6.5. So we see this. We can see that gold and silver are almost acting like a mirror to each other, and we know that is from the very correlating uses that it has in the world. But I still do think that silver has more potential than gold. Over here, you could even see gold remains to go to the safe haven asset in 2020. You can see some of these things if you want to on the sidebar. It talks about some gold and silver. Gold looks healthy at current levels. It doesn't look that way for silver though. Wednesday's chart for gold and silver, platinum, and palladium. You can see everything over there. So anyways, now we can go into the silver, which is what most people want. So March silver futures bulls still have the slight overall near-term technical advantage, but are fading as a 5-week-old price uptrend on the daily bar chart has been negated. Silver bulls' next upside price breakout objective is closing prices above solid technical resistance at the January high of $18.89 an ounce. The next downside price breakout objective for bears is closing prices below solid support at $17. First resistance is seen at $18, and then this week's high of $18.13. Next support is seen at this week's low of $17.69, and then at $17.50. Wyckoff's market rating 5.5. So we have a lot of information to go over. So first, we knew that there was going to be some stability against gold and silver prices once it started to drop. This means that the support lines are being met. This means there is some foundation that has been built upon people's value, the fundamental uses, the fundamental value, the intrinsic value that gold and silver have as a safe haven asset, as not only that, but also as an industrial component, a very strong component in the technological world, especially the way we're advancing in. And people see this now. People see this now, and they're going to want to be stacking more gold and silver as recession is looming, as this stuff is still pushing, as stock markets aren't always going to be setting record-breaking highs, as the U.S. partial trade deal goes with China, Iran tensions, even if they are standing down or settling or rising, gold and silver is always one of the things that are in the topic of discussion, and that's what's going to be driving new investors in, new money in, and also for the people that are really seeing the real value of it to keep the tables turning. So anyways, Like I said, the link to this article will be in the description if you want to check it out yourself. I hope you guys enjoy this video. Hopefully you guys found some insight, some knowledge into this. What do you guys think the U.S.-China partial trade deal has today? What is this significant? Is any significant damage to gold and silver prices, as it could be putting tensions more at ease as people see that maybe they can go through with this? Or do you think that it could easily blow over or become very wishy-washy like it has, even like the article said? I'm curious what you guys think about this. Anyways, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.